You know, if you spoke English and you're an individual and you found out that the most powerful person in the world also spoke English, would you be offended? You know, and if you found out that the people that run the bank that have all the money in the world in it also spoke English and offered websites in English, and if Apple and Google and Meta also offered software that ran in English, you know, would you think, wow, they took my language, I want them to give it back? I don't, you know, if your dentist speaks English and the doctor speaks English and the cab driver speaks English and the pilot speaks English, is that bad for you? I don't think so. I think ultimately you want all of the rich, powerful, influential people, even the ones you disagree with, you want them all to speak your language. You want them to adopt your protocol. But if they're doing something that's bad for you, you want to see it coming and understand that they did it, right? And so Bitcoin is a protocol. Ultimately, you want everybody to use the protocol. The world's going to be a better place, and you're going to be better for their embrace of the protocol.
Yeah. I think it's really well said and helpful. Thanks for indulging the questions about FUD. Let's pivot a little bit to talk about the Bitcoin Treasury companies, this wave of them adopting Bitcoin. You know, we talked a little bit about competition and how it's not a zero-sum game. Still, we're seeing there tends to be some regional kind of disputes and wanting to kind of be the first mover, the competition for capital. What would you say to companies who are kind of in that space where what would be your encouragement in terms of competition?
Let's start with the basis, the fundamental premise of the industry. Um, Bitcoin is the monetary base of the crypto economy. It is the monetary crypto network. It is digital gold. If you go back 3,000 years, go back and read the Persian expedition by Xenophon. It's about 600 BC-ish. And Xenophon's writing about a bunch of Athenians and Spartans that are mercenaries, and they go into Asia Minor, and then they charge all the way through Babylon to Persia, and they're fighting for, Cyrus against his brother, and Cyrus gets killed, and they have to make their way back to Greece. They have to cross 800 miles of hostile territory, and they fight their way back through 100 tribes. All the tribes speak a different language. They all have a different culture. They all want to kill each other. The Athenians don't trust the Spartans. The Spartans don't trust the Athenians. No one trusts the Persians, right? It's nonstop bloodshed and war, and this is before the Lydian coins. This is before we have coinage. Now, here's the thing that's interesting about the story. The one thing they agree on is they all want to kill each other for gold. They all want gold. Now, why do they want gold? Somehow, 600 BC, everybody agreed that gold was valuable and gold was money, even though they could not agree on their gods, their cultures. They couldn't agree on anything else. But what's fascinating is the book takes it for granted that gold is money. Gold has been valued by thousands and thousands of different cultures, all killing each other, speaking different languages, worshiping different gods, but they're all fighting over gold. And so gold emerged as the primary monetary metal, not silver, not bronze, gold. For 300 years, if you look at the 17th century, the 18th century, the 19th century, even into most of the 20th century, the world revolved around gold-backed credit. Okay, we issued bonds backed by gold. The British bonds, sovereign debt in Britain in 1770 was a gold-backed bond. In the Rothschilds' times, they had gold-backed bonds, right? The French bonds were gold-backed. The German bonds, the Austrian bonds, the Spanish bonds, gold-backed. All of the credit instruments were, to a certain degree, backed by gold, and they would go off the gold standard and back on the gold standard. But this idea of gold-backed credit goes from the 1700s to the 1800s to the 1900s, all the way through 1971. And so we have hundreds and hundreds of years of gold-backed credit instruments. Then we have to wait, and Satoshi invents Bitcoin, and we fight over what is it, and no one can decide. And now, in the year 2025, we have consensus that Bitcoin is digital gold. So on the CNBC, talking heads agree on it. Everyone in the crypto economy agrees Bitcoin is the monetary foundation. It's digital gold. What are the other cryptos? Maybe they're digital silver, maybe they're digital copper, maybe they're digital palladium or digital platinum or digital silicon, but the history of Western civilization isn't based on copper bonds, right? And there was an experiment with silver, but silver bonds didn't really fly. Primarily, we settled upon one metallic monetary network, and now we're settling on one crypto monetary network. So what is a Bitcoin treasury company? Well, there are two profound paradigm shifts. One, Bitcoin, digital capital, right? Digital gold. Never existed before. You could argue that it's only been 9 months since the entire world agreed that Bitcoin was digital gold, okay? That means you can now issue digital gold-backed credit or digital credit. If Bitcoin is digital gold, it's digital capital. And that means that any credit instrument backed by Bitcoin becomes digital credit. What we're talking about, is, if you look at it myopically, you're just thinking, well, how are these companies helping Bitcoin? If you look at it more grandly, the real point is, how are these companies transforming the equity market and the credit market? If I create a company that buys Bitcoin and I accumulate $1 billion of Bitcoin, I have $1 billion of digital capital. What can I do with it? I can issue digital credit. Now, I want you to think about this for a bit. If I had $1 billion of gold, I'm a gold bank, a goldsmith. I have $1 billion of gold. I issue $100 million of gold-backed credit, gold notes. And then they thought, well, why not 500 million? And then they thought, why not $1 billion of gold notes? And you know where the story goes next. They're like, well, why not $2 billion of gold notes? Why not $10 billion? Pretty soon you had $5 of gold-backed credit for $1 of gold, okay? And the entire modern banking system grew out of that issuance of credit, and the credit started from gold. And what was the strongest credit? 1-for-1 backed, right? 1-for-1 backed would be the strongest credit. Okay, so that means $1 billion of Bitcoin could, in theory, be used to issue $1 billion of Bitcoin-backed credit that would be 1-for-1 backed.
Right.
Okay, now, what's that displacing? It's displacing mortgage credit based upon retail houses, residential houses, commercial credit, that's credit based on commercial real estate, a building that's half empty, right? Or it's displacing corporate credit based upon the cash flows of a company. Or it's displacing, fiat credit that's based on the promise of a government to print more credit, right? That is the status quo. And how big is that? Hundreds of trillions of dollars of those 20th century credit instruments. And when you understand Bitcoin Treasury Company, the very compelling business model is, I accumulate a bunch of Bitcoin capital through equity. Then I begin to issue credit instruments against it. And those could be bond-like instruments. They could be convertible bond instruments. They could be preferred instruments. They could be convertible preferred instruments. They could be variable floating preferreds. So there are all sorts of types of credit that can be issued against the underlying digital gold. When you issue that credit, you create leverage on the capital. And when you create leverage on the capital, the equity of the company issuing the credit becomes digital equity, and that equity can outperform the Bitcoin. So if I want to create a company that's going to perform 2x Bitcoin, I take the Bitcoin, I issue Bitcoin-backed credit against the Bitcoin. I issue digital credit backed by digital capital. I create digital equity. And the digital equity outperforms the underlying capital asset. Now, that's a profound idea. Who are those companies competing against? Not really each other. What they're competing against is the existing credit instruments in the capital market where they're going to issue credit, or the existing equity instruments in the capital market where they're issuing equity. They're all just using Bitcoin as that leverage or as that base, that monetary base, in order to create better equity and better credit. So, that being the case, you're going to see an explosion of these companies, and if they understand what I just said, if they understand it, then it stands to reason. Let's take Brazil. I create a company, OBTC, or Orange Bitcoin, in Brazil. They're creating the first pure digital equity in the Brazilian market. And their base is Bitcoin, an asset going up 55% a year in dollars. And they'll be competing against other equities in Brazil that aren't going up 55% a year in dollars, right? Think about a company with a 55% growth rate being launched in Brazil. Is the equity valuable? Sure it is. Who are they competing against? Every company in Brazil, right? And then when they issue credit instruments, they'll be competing against every credit instrument in Brazil. When you go to Japan, Metaplanet is issuing digital equity in Japan. Who are they competing against? Every Japanese company. Bitcoin's growing 55% a year. What's the growth rate of the average Japanese equity? 1/5 that, 1/20th that. Then when they start issuing credit, meta yield, they'll be issuing credit, against Japanese credit instruments. The Japanese risk-free rate, or the corporate bond rate for yield in Japan, is like 50 basis points. If you offer 500 basis points, you are 10 times better than the thing they're issuing. So there's place for monsters, for mega companies, right? Metaplanet, won't just be the most valuable hotel company in the world. They may be the most valuable company in all of Japan, right? They can create, and by the way, they're small compared to us, but the point is they're not competing against us.
Right.
They're competing against Japanese equity and Japanese credit in the JPY currency, and that's a distinct capital market. That's why it makes sense to launch a Bitcoin company in Sweden, in Norway, in the Netherlands, in France, in the UK, in Brazil, in Japan, in Canada, and the US. Now, having said all that, right, all those capital markets, they're waiting for a mega champion, and the mega ones, the ones that are pure digital credit issuers, they could be 100x. They could be, they're ones you can take a $10 million or a $1 million company to $1 billion to $10 billion to $100 billion. And if it's a big capital market like the UK or Germany or Japan, you can go to $1 trillion, right? That doesn't mean there can't be 10 other companies in Japan that also follow Metaplanet, and they all 10x. Because let's take the US. We've issued digital credit instruments in the US. We've issued, $10, $12 billion of convertible bonds. We have about $8 billion outstanding now. We've issued $6 billion or so of preferred credit. What is that compared to the U.S. credit market? The U.S. dollar credit market is, 100 trillion. So 1 trillion is 1%. 100 billion is 0.1%. So what is 10 billion?
Yeah.
It's a basis point. Okay, so what we're doing is we're not competing against the other Bitcoin treasury companies. We are evangelizing and advocating digital credit, and our move is to digitally transform the credit markets. And if we are 1% successful, we sell $1 trillion of digital credit, just 1% successful. So what would help us? What would help us is a dozen other companies in the United States also marketing and evangelizing and educating the investors on digital credit, right? We have 100 million retail investors. How many investors, have dollars and want 10% yield instead of 3% yield from their bank? It's a lot, right? Okay, how many of the 100 million people that would prefer a bank account that yields 10% to a bank account that yields 3%? How many of them know about Stretch, STRC? I mean, a lot of people in the Bitcoin community don't even know about Stretch, right? So I give you a bank account backed by Bitcoin that gives you 10%. Well, what would help us? 100 other companies copying that. You're like, well, won't that get crowded? Okay, well, I'm describing kind of a better bank, right? Instead of going to a traditional fiat bank and getting 3 or 2% on your bank account, you go to a Bitcoin Treasury company and you get 10%. A better bank. Well, how many banks were there in 1920? 25,000. Okay, how many banks are there today? 5,000. Okay, so there could be 5,000 Bitcoin Treasury companies in the US. Would it hurt us? No. Would it hurt them? Not really. Not until 50% of all the credit in the world has been digitally transformed to Bitcoin-backed credit. When there's $100 trillion of Bitcoin-backed credit, the Bitcoin ecosystem is hundreds of trillions. There's hundreds or thousands of companies. Who lost? Okay, and I'll give you the answer, by the way, who's going to lose, right? Outside of the Bitcoin ecosystem, 20th century credit issuers, right? People issuing junk credit, under collateralized, illiquid, low yielding garbage, right? They're going to find their credit lines will dry up, because why would you invest in illiquid garbage that's not collateralized, that gives you 4%, when you can invest in liquid credit that pays double or triple, that's 10x collateralized, right? So weak, antiquated credit issuers will get squeezed out. You can't even name them, right? It's like 4,000 weak regional banks that are selling preferred shares. You don't even know who they are. You can't even name them. They're trading over the counter. The 20th century over the counter market and the weak credit issuers, they will see credit lines. They will get squeezed, not overnight, but over the course of a decade or 2 decades. Within the Bitcoin ecosystem, it's pretty hard to hurt yourself, but if you find a way to get super leveraged on short-term, extremely expensive margin debt, how do you hurt yourself in the Bitcoin ecosystem? I guess you take out a 5-to-1 levered loan from a crypto exchange. So it's not 100% levered, it's 500% levered, and you post your collateral. If you can find a way to do a margin loan super levered, then maybe you hurt yourself. But I don't think public companies will be able to do that. I don't think the market will offer publicly traded Bitcoin Treasury companies that kind of leverage. So I think if you stick to convertible bonds with longer duration, or if you go to preferred stocks, or even if you went to junk bonds, as long as they were 4 years or longer duration, you're fine holding Bitcoin. The people in the ecosystem that got hurt the most during the crypto winter were Bitcoin miners. And the reason they got hurt, and the reason many of them were forced into liquidation, is they were taking 12-month and 18-month loans that cost 15%, and they weren't buying Bitcoin. They were buying Bitcoin mining rigs that depreciate 20% a year or 30% a year. If you take a short duration loan and buy an asset that depreciates 30% a year, you're going to have a financial problem. If you take a mid-duration or long-duration loan and buy an asset appreciating 30 to 60% a year, you'll probably be fine. So I think that you would have to be very creative and quite cavalier to hurt yourself as a Bitcoin Treasury company in the public market.
Yeah.
You might do it. There'll be a few that will do stupid things, that will be financially irresponsible. But for the most part, you're going to have three categories of Bitcoin treasury companies. You're going to have the pure play digital credit issuers that are laser like focused. Our company, a Metaplanet, someone like probably a Strive, I'm going to guess. Someone with a lot of equity capital that's going to just sell equity and pure credit, and they're going to be laser like focused. They're going to 100x or 1000x. Those are going to be the screaming equity winners. Those are going to be the next Mag 7 stocks, right? Those are companies that can go from $1 billion to $100 billion or to $1 trillion, right? Then you're going to have the strong Bitcoin players. Maybe they're not the single dominant player in their market, but they're strong Bitcoin. They got a lot of stuff going on. They'll 10x, 20x. They'll be good. They'll win, but they won't be the next Mag 7.
Are they issuing credit, or what's kind of that?
They'll be like, companies that are very, that buy a lot of Bitcoin and do some. It's not their laser like 150% focus, but they'll do some and they'll be strong performers.
Right.
And then you'll have companies that just buy some Bitcoin. And they'll buy some Bitcoin and they'll have another business. And over time, the other business may trade sideways, and the Bitcoin will actually support the equity market cap of the company. And so they're the ones that can't lose. But because they're not 100% focused on Bitcoin, because they have another business, they have other liabilities, they'll grind up with the S&P and they'll be successful even if their core business doesn't work, right? But they'll still be low risk. Maybe they'll be 2, 3, 4xer, right? And I think you'll see all of that, and it all comes down to the conviction of the management team and the business model. If you're saying, well, what would I like to be? What you'd like to be is a pure play Bitcoin treasury company that issues equity and issues high quality Bitcoin credit. And you want to own that capital market. You want to be the category killer in the UK, in France, in Brazil, in Norway, in Japan, in the US, in Canada, right? In Germany, in Italy. The home champion is always going to have a home court. The national champion will have a home court advantage. You're going to have tax advantages, issuance advantages, regulatory advantages, marketing advantages, language, cultural advantages, and focus advantage, right? When you get up and you issued the first digital credit instrument in pounds, your smarter web, and you're doing £100 perpetual Bitcoin-backed credit in London. Or then you do in euros on the Frankfurt Stock Exchange, right? Or you do it in yen in Tokyo, right? At that point, you're selling the strongest, highest yielding credit instrument in a capital market that's got garbage. Like, go to Switzerland. You know what the yield is for short-term money in Switzerland? It's negative. Okay? You have $10 million, you put it in a Swiss bank, they take money away from you. In fact, the yields are negative out to 4 years on the yield curve. Okay, so the risk-free cost of capital is literally less than zero. A Swiss company with Bitcoin capital selling something that pays you 400 basis points in Swiss francs is offering 4 or 5% more than everything else. And okay, well, there's like $800 billion that's getting eaten. Why wouldn't that capital just start to flow, right? So why couldn't you issue $10 billion of Swiss franc backed credit?
Yeah.
And if you basically have a cost of funds of 5% in Swiss francs and you're investing in Bitcoin returning 50%, think about how fast you can grow that business. You become the greatest Swiss, bank, right? You'll become the greatest Swiss financial company in the entire nation, and you do it in a matter of 5 years. So you could become the strategy of Switzerland, except you can do better than us. We got from 600 million to 120 billion or whatever, 110 billion, depending on the day. We got there in 5 years, but we had to learn as we went along. We had to experiment, and we had to go through, 20 different credit, issuances, and we had to discard a lot of stuff. If you were doing it from scratch today, you would just skip the first, 4 years. I would say, like, here, I already give you the answer. You raise equity capital, you buy Bitcoin, you put 100% of it into Bitcoin, and then you sell a Bitcoin-backed money market, a short duration credit instrument that just strips the duration to 1 month, strips the volatility, right? Strips the delta, and just give people 500 basis points more yield than the risk-free rate in the capital market where you're selling the credit. And you could literally have a company with one credit instrument trading publicly and one equity instrument, rinse and repeat, and you're going to grow as fast as you can educate the capital market that you're selling into, right? And you could, in theory, do what we did, but you could do it in half the time or a third of the time. It all comes down to how charismatic is the leader of the company? Are they trusted? Is the brand trusted? Or are they laser-like focused?
Yeah. I love that answer. I think encouraging sort of an abundance mentality is much, much needed in a world where scarcity sort of dominates. You kind of answered my next question, but I do want to dig into Stretch a little bit. You describe kind of this end game. Is it, building a better bank, you mentioned, is that sort of where you see strategy heading? And right now, this product exists. People can put their money in it. It's a phenomenal asset to the market, but is it just a matter of educating the public that this exists, or how do we continue to evolve?
Yeah, well, I think the end game is we accumulate $1 trillion worth of Bitcoin, and then we grow it 20, 30, Bitcoin appreciates 21% a year in 21 years. And then we grow that capital by issuing more credit. So we're growing faster than 21%. So the end game is get to $1 trillion of collateral growing 30% a year, be issuing $100 billion of credit a year, growing 20, 30% a year. And that credit is yielding 200, 300, 400 basis points more than all of the real estate backed credit, the corporate backed credit, the fiat backed credit, or any other type of credit instrument in the world, right? And what's going on there then is you reinvigorate the credit markets. Instead of people having a credit, they're sick in Switzerland, right? Instead of getting zero in Switzerland, if someone is issuing, if half the credit in Switzerland is digital, then the zero goes to 200 or 300 basis points. And because it goes to 300 basis points, maybe the risk-free rate goes up and financial repression becomes less common and more difficult, right? You're actually improving the traditional credit markets, and you're offering Bitcoin believers something 3% better. Same thing in yen, right? Eventually, instead of trillions of dollars yielding 50 basis points, the average blended yield will go to 300 basis points or 400 basis points, and you return health, and integrity to the credit markets everywhere in the world. And it's done by some combination of Bitcoin Treasury companies working in concert with each other, right? The Bitcoin network becomes a multi-$100 trillion network. The amount of digital credit, 10 trillion, 20 trillion, 100 trillion, right? What if there's $100 trillion of digital credit and hundreds, by the way, 100 trillion in digital credit backed by 200 trillion worth of digital capital would be not fractional banking, right? You haven't got to 1-to-1, you're still 2x over collateralized, which would be better than the very best AAA corporate investment grade debt in the United States is like 2.5 times or 2.5 times over collateralized. Yeah. So it's all AAA investment grade, but with more yield and more transparency. So I see the end game as the credit markets are reinvigorated and digitally transformed to be backed by Bitcoin, digital gold, digital capital. And I see the equity markets are reinvigorated because the equity indexes all start to hold these companies, right? We creep into the equity indexes. Metaplanet gets into the equity indexes. And then pretty soon, all these companies in the S&P 500, they all have Bitcoin. And if all these companies have Bitcoin, then the S&P index is substantially got a component of Bitcoin, and Bitcoin's going up 21% a year, right? So companies get healthier, credit gets less risky, yields, your savings account doesn't give you 0% in Switzerland or half a percent in Japan or 2% in Europe or 1. It gives you 6, 7, 8, 10, right? So I think I think the 20th century banking networks get transformed. The 20th century credit networks get transformed. The 20th century equity capital markets get transformed. Bitcoin becomes the foundation of the 21st century digital credit, digital equity, digital banking, digital capital, digital economy. And Bitcoin treasury companies are the engines, the drivers, the dynamos powering up that network. And, the experimentation is extraordinary. There's a Cambrian explosion of ideas. The way you do it in South America is different than the way you do it in North America. And at some point, Bitcoin will find its way on the balance sheet of insurance companies, and it'll find its way on the balance sheet of actual banks and tech companies. And if you start to reimagine insurance, powered by Bitcoin, it's a different world.
Right.
Better insurance. And reimagining bank accounts powered by Bitcoin. What happens when your bank offers you a money market that's not fiat powered? Because the fiat powered money market would pay you 420 basis points right now, but a Bitcoin powered money market would pay you 10.2%, 1,020 basis points right now. So as banking gets reinvigorated and as insurance gets invigorated, and when the Apples and the Googles are, custodying and offering Bitcoin via all their rails, then you've got a digital transformation it's an invigoration, and we start to reach a digital economy which is smarter, faster, stronger, 10x better, 10x more productive, maybe 100x more productive. And the people that are in that economy win. And the people that are blocked from that economy look like the North Koreans where their lights go out at night. They get locked off the power grid. And hopefully, it'll be such a compelling future that no one will want to be locked off the grid. Right. Your choice is to be smart and fast and strong and rich, or you could be stupid and slow
and broke, yeah,
and weak and poor.
Yeah.